is available to individuals as
Save your money, your girl with this up with we are here for you.
Say, so when faced with the
investment with our diverse talents, why not both?
In this changing business landscape, we find ourselves asking more and more how best to help our clients. Traditional values
or innovative ideas.
And the answer always is, why not both?
to your needs. Get instant loans at your Joy 100% control with our self-service option.
For more information on how we create value for you, visit www.fmdqgroup.com and follow us on our social media handles.
Step by step to your dream business. Try my best to get to the next level, but I really need some help. I know just what to do.
Vault is available to individuals, SMEs, and corporate customers. Download Vault by Polaris Bank from the today. Keep our word.
You can have one or the other. It's not something that we at R&B like to say.
How best to help our clients?
Instant from the app. Pay, send, and receive money conveniently with NQR. And enjoy all other features you have come to love.
In the Nigerian economy, we're often thinking about the nairas and the kobos, and sometimes even we admittedly forget to pause and think about that. So that was something that resonated quite strongly with us as treasurers, and we thought it was the appropriate theme to lead us into 2024, just to really sit down, think about, a lot of the conversations that we're going to have today, and it hopefully just starts to reignite that passion that we all have within ourselves to actually understand that we have a role to play and what our value proposition is in taking our nation to greater heights. So my expectations are that we leave here we leave here wanting more. Individuals and the role as institutions.
Next on the agenda is introduction of the keynote speaker. As an executive trainee in 1998, rose through the ranks and has garnered over 25 years in finance, investment banking, investor relations, and transaction services. She holds a Bachelor's of Pharmacy degree from the University of Ibadan, Nigeria, and a Master's of Business Administration from the University of Liverpool, United Kingdom. She has also attended several executive management and banking-specific developmental programs in leading education, as well as financial market dealings across African subsidiaries. Mariam currently serves as a non-executive director in the board of Guarantee Trust Bank, Gambia. She's also a non-executive director of the Nigerian Interbank Settlement System, NIBS, and the Shared Agent Network Expansion Facilities, SANEF, an agent banking initiative of the central bank supported by Nigerian banks. She is a member of the Financial Markets Subcommittee of the Bankers Committee, the primary interactive policies. Gentlemen, it is my pleasure to introduce my boss, a leader, and my mentor, Mariam Olitoya.
Thank you very much. Good morning, my senior colleagues, regulators, members of the FMDA, and other professionals here. The FMDA, in its capacity as a self-regulatory organization, has come a long way since its inception, and that we are gathered here today for the association's 7th annual Financial Markets Conference, financial markets in Nigeria, but the economy as a whole. I would like to thank the Governing Council, led by the FMDA President, Committee and work groups, past and present, for their tremendous work in upholding the vision and objectives of the FMDA and for the opportunity given to me to deliver this address. Permit me to make particular mention of His Royal Highness Mohammed Sanusi II, CON, former Emir of Kano, who is slated to speak later today. A foremost Nigerian banker who went on to lead the central bank, saw far-reaching reforms that guided the financial system through that period of instability, reinforcing stakeholders' confidence in the banking sector. A visionary, he introduced the cashless policy and was a strong proponent of non-interest banking in Nigeria, amongst other defining initiatives. His insights and leadership will most certainly be invaluable. I also use this opportunity to recognize the central bank and current chairman of Titan Bank, Ms. Ewe, a former banker and financial market expert. Their insights and experiences will be most valuable to deliberations at this conference. And all my senior colleagues present. The foundation of Nigeria's financial system was laid during the colonial era, where British administrators established institutions to facilitate trade and extraction activities at the same time. The introduction of the currency board system in 1912 marked a crucial step, bringing about a more formalized monetary structure. The Central Bank of Nigeria, established in 1958, assumed control of monetary policy with the overriding objective of ensuring financial system stability. The Lagos Stock Exchange, which later evolved to the Nigerian Stock Exchange and now the Nigerian Exchange Group, was established soon thereafter in 1960 to facilitate capital investments in businesses, and the creation of other regulatory bodies like the SEC, NDIC, NICOM, and various other exchanges have had significant impact on Nigeria's financial. Nigeria's financial market has undergone profound changes over the years, driven by an interplay of historical events, regulatory reforms, economic imperatives arising from the various cycles, and a journey of adaptation and resilience to become the dynamic framework we know it to be today. As a country, we have continued to benefit from an increasingly robust financial system with a plethora of institutions providing varied financial services to its teeming population. At the core of the Nigerian financial system are the regulators that provide supervision and oversight for the activities of these institutions, holding them accountable and ensuring that they continue to be fit for purpose. Despite having the largest economy and population in Africa, Nigeria's real economic performance continues to lag expectations. It is hoped that recent exchange rate liberalization as well as progressive fiscal policy measures will serve to bolster the economy in the mid to medium term. It's, however, becoming increasingly clear that the ability to attain fiscal and monetary implementation as well as drive reforms could hinge on adaptations within the Nigerian financial sector, specifically activities within the Nigeria financial market. Essentially, without sustained structural and operational efficiency in the financial market, it will be difficult, if not impossible, to make any substantial progress with policy implementation and enforcement at both macro and micro levels of the economy. In view of this, it is pertinent to consider the role of the financial market in repositioning the Nigerian economy. The financial direct the flow of savings and investments in the economy in ways that facilitate the accumulation of capital and drive production. While the money market provides an efficient platform for distribution of liquidity amongst financial institutions and the hedging of short-term risks, the capital markets supplement financing and facilitate the free flow of long-term capital through debt or equity. The combination of a well-developed financial market and related institutions, as well as a diverse array of financial products and instruments, fulfills the needs of borrowers and lenders, and by extension, that of the overall economy. Large financial markets with a depth of activities provide more liquidity for market participants than thinner markets, with few available securities and participants, and thus limited intermediation opportunities. A functional financial market serves a wide range of essential purposes, mobilizing capital, aiding efficient price discovery of financial instruments, providing a platform for divesting or investing in financial instruments, aggregating the information on market expectations, and distributing risks among investors and stakeholders. In many developing countries, Nigeria included, a great deal of effort is concentrated on boosting finance for economic activities in the real sector, as it is one of the main drivers of the economy for propelling economic growth and development. In recent years, there have been intervention efforts to channel funding to the real sector. However, their implementation has had limited success, highlighting some of the documented risks of government interventions, while also highlighting a primary feature of financial markets: efficient capital allocation. Essentially, despite the achievements recorded by the Nigerian financial markets over the years, the entire spectrum of players and market activity are still not large enough to mobilize massive units of funds when compared to markets in other climes. Distinguished guests, these challenges notwithstanding, the financial market and related institutions remain the engine room of economic development and growth. It's important at this juncture to acknowledge the role played by the Financial Market Dealers Association of Nigeria, the FMDA, especially in the areas of enhancing market infrastructure, human capital development, and promoting professional and ethical standards. Indeed, the FMDA has helped to guide the evolution of our financial market and champion product and service innovation over the years. The creation of the FMDQ exchange was birthed off the various efforts by the FMDA to champion the development of a robust market for fixed income securities. With the support of banks and the central bank, the FMDA was able to obtain the relevant sponsorship that led to the incorporation and licensing of the FMDQ. Might I say that the successes and milestones that the FMDQ has enabled would not have been possible without the pioneering efforts of the FMDA and the continuing support of its members. Again, I would like to commend the efforts of all members who are committed to advancing global best practice and overall efficiency within the Nigerian financial markets. Some of the core functions of the FMDA today are related to regulatory policy engagement and advocacy, as well as maintaining professional ethics in the financial markets. It also promotes and enhances capacity building of members through the development of relevant curriculum, collaborating with regulatory bodies within the global financial ecosystem. These worthy ideals have come into increasingly sharp focus in recent times, and their sustenance will be critical towards repositioning the Nigerian economy for the future. This is even more important as we gradually shift towards a more market-driven economy. The need for the strengthening and deepening of our financial market cannot be overemphasized. The stability of a financial system is often noted to be a core aspect of economic development, and as witnessed by the growth of the banking system, needs to be supported by the existence of a strong capital market, both debt and equity. Together, the financial market can provide alternative funding sources necessary for the repositioning of the economy for growth. As agents of the financial market, banks play a critical role in mobilization of savings, the facilitation of and settlement of economic transactions, and the creation of credits necessary to jumpstart entrepreneurial activity and enterprise. As the primary coordinator of monetary value within the economy, banks are vital to the development of industry and trade. They act as guardians of the country's wealth and resources and enable capital to move to productive assets at the appropriate time, fueling economic growth and creating a platform for the financial processes that facilitate seamless commercial exchange and financial services at low cost. Banks play a central role in the transition. Due to its central role, the safety and soundness of the banking system is a major concern for the government and the regulators that are tasked with the oversight responsibilities for the soundness of the financial market. There are many references to how weaknesses within the banking system has precipitated crises in the financial market, and in some instances, economic downturn. The 2008 financial crisis is an example of how weaknesses in the banking system can create a contagion across several facets of the financial market, precipitating a financial crisis and result in an economic crisis. It requires an equally comparable capital market that is able to provide alternative financing sources to firms, requiring medium to long-term capital investment. Though more structured and less nimble compared to bank credit, capital markets do have a significant role in capital formation and economic development, especially where it relates to large-scale industrialization and infrastructural development. It is noted that a well-developed capital market is particularly important in the reallocating of capital and providing a basis for continuous restructuring of the economy, with a greater share of investment allocated to the faster-growing sectors of an economy. Together, a strong banking system and a robust, well-structured and deep capital market can significantly contribute to the repositioning of the Nigerian economy. In addition, the financial market plays a role in enabling the development of human capital within an economy. Human capital refers to the various skills, well-being, and knowledge that an individual possesses that can be utilized in achieving productivity. As we are all aware, allocated fiscal resources are not enough to meet the demand for investments required to achieve formation of needed human capital. We can therefore infer that activities of its participants. Due to its unique role within the economy, the financial market can play a catalytic role in the development of human capital within the economy by providing long-term financing, risk management solutions, and bridging the gaps created by information asymmetry necessary for the efficient allocation of capital to only viable projects. We must, however, recognize that the existence of a robust financial market does not necessarily lead to economic development. Excesses and abuses within financial markets can be detrimental to economic growth and development if not adequately addressed. There is therefore a correlation between the quality of regulatory oversight and supervisory efforts and the soundness of the financial market. The introduction and implementation of market-oriented reforms and regulatory policies are needed to strengthen and sustain the development of a fit-for-purpose financial market, able to reposition an economy for growth. A case in point was the introduction of market-based reforms in Singapore between 1980 and 1990, leading to a liberalization of the financial market and repositioning it to a financial hub to attract global investments. The Monetary Authority of Singapore adopted a risk-based regulatory approach, promoting flexibility and adaptability in response to dynamic market conditions. A robust financial ecosystem soon emerged, encouraging innovation through regulatory support and collaborative initiatives. Initiatives like the Regulatory Sandbox allowed financial institutions to test innovative solutions within a controlled environment, fostering technological advancements. Singapore has since evolved into a pro-business environment with excellent financial infrastructure, an effective regulatory environment with a pool of highly skilled and experienced financial professionals. Another economy that warrants mention, South Korea, emerged from the challenges of a financial crisis stronger, due in part to the depth and robustness of its financial markets and the strengthening of its regulatory frameworks. It is important to highlight here that the key lesson was the ability to recover faster and stronger following a crisis because of the strength of the financial markets. You will agree that South Korea has not only grown stronger, but it also continues to innovate and adapt to global economic and geopolitical dynamics, with its financial markets playing a pivotal role in the nation's steady economic ascent. As highlighted earlier, a robust financial market can provide a launchpad for the positioning of an economy for growth. This capacity is hinged on its ability to mobilize capital, ensure its efficient allocation towards value projects, distribute risks, and mitigate information asymmetry. Equally as important is the strength of the regulatory environment under which the financial institutions operate, and the adherence of these institutions to ethical and sustainable practices. The need for regulation stems from the desire to ensure that firms are ethical in their interactions with other stakeholders, especially the ones they serve, the customer and the consumer. Where financial markets operators interact, there's an implicit understanding that they are professionals, able to appreciate and evaluate the risks involved in their transactions. It therefore behoves on the government, and by extension the regulators, that the operating environment within which financial institutions operate be open, flexible, and encourage innovation. Financial intermediation has only evolved this far because players before us have been bold and innovative in the application of knowledge. Progress cannot be made without taking risks. And risks, by any other name, emanates from a desire to innovate and find better ways to achieve growth. It is therefore pertinent that the regulatory environment does not stifle innovation nor deny the participants the rewards of taking risks. It must, however, protect the consumer from the frivolities of the financial institutions and their agents, and be tough on unethical behavior that has the potential of destabilizing the financial markets. Such environment will motivate financial institutions to be innovative about providing products and services that can address the varying needs of their customer. Products that can encourage financial inclusion, mobilize savings, mitigate risks, and create wealth with long-term benefits for the economy. It will define the rules of engagement between financial institutions and their customers with a view to protecting the customers and punishing institutions that act contrary to the rule. For the financial market to play a key role in repositioning the Nigerian economy, there's also need to promote sustainable business practices. This is not only an ethical imperative, but also to align with global trends and can attract responsible investments, as seen in other developing economies. As Nigeria strives for economic repositioning, a commitment to sustainability in the financial sector becomes a cornerstone for long-term growth, attracting responsible investments and fostering a positive societal impact. Beyond regulatory compliance, financial institutions engaging in ethical and sustainable practices environmentally conscious economy. Also, leveraging the financial market to enhance financial inclusion is critical. This involves access to banking services, particularly in rural areas, uptake of digital financial services, notably mobile money, is still lower than in peer countries. And overcoming this will require improving digital financial literacy, upgrading digital infrastructure, and promoting sound practices, along with a comprehensive package of supportive policies. The motto of the FMDA, "Our word is our bond," is a phrase that speaks to ethical behavior in all interactions. It reflects the continuing demand for professionalism among all FMDA members and indeed the industry. It reflects our commitment to be professional in our interactions with all participants of the market. We must not relent in capacity development as it has immeasurable benefits, including innovation, increased productivity, disruptive competitiveness, and professionalism. The FMDA has done well in this regard, and I would like to encourage the Governing Council to ramp up its training and development efforts to proactively prepare for the market of the future. During this conference, the eminently qualified speakers will elaborate on some of the challenges facing our economy, as well as identify the opportunities for stakeholders in the financial interest in these discussions, and be resolved to actively participate in the realization of better financial markets and indeed a more vibrant economy. In closing, I would like to restate my opinion that economic development starts with the ability to pool the human and financial resources required to define and finance the activities that will bring about development. The strength and robustness of our financial market is therefore integral to economic development. To reposition our economy for the growth we deserve, the needs of economic players, financial institutions that are strong and punishes unethical behavior of the institutions, and a pool of skilled and motivated workforce able to participate within the various facets of the economy, including the financial market. We are at a crucial point as a nation, and it behoves us as stakeholders in Nigeria's economic development to promote
Thank you very much, Ma, for the presentation. From the speech, I think we all realize what we have been echoing in the market. It was important to us that we chose people that have actually traded.
I must say, and it's refreshing. You know, there are certain dignitaries that just appear in your midst. You know, if you're on this side where I'm standing, then you know it's a rare privilege and it's a great honor. Okay? We need to fall down. In Risk Bank, when I started my treasury after his, I think somebody asked him what was his desire or something, and that was the first time I heard he wanted to be the Emir of Kano. It was interesting. And without that, he became a very decorated Emir of Kano. He's very controversial, so he seems to like controversy. And he said he's not very intelligent, but in my mind I said, if this man is not intelligent, please, I don't want to be intelligent too.
Also shaking, and please, Sanusi Lamido Sanusi, CON, title Khalifa Sanusi II, is a spiritual leader in the Tijaniya Sufi Order of Nigeria. He is a member of Dabo dynasty and the 14th Emir. I'm sorry, sir. I'll have to start again. His Highness Muhammadu Sanusi II, personally and popularly known as SLS by bankers. He is the CON of Nigeria.
You're going to have dollar reserves, you're going to have devaluation. So we should plead for, and we should have known that is where we're going to end up. So that's the situation. Now, question is, what is to be done? And the truth is, some good things have been done. There's still things to be done, and there are things that could have exchange rates will be in the short to medium term. When I was in the CBN, MPC, we used to do something that wasn't done before. We actually used to announce the target exchange rate And everybody knew that at least from one MPC to another MPC, this is where the exchange rate was going to be. If we had pressures and we needed to come into the market to sell dollars, we'll come in and sell dollars to keep the exchange rate within that band. If we needed to go in and buy to avoid an overvaluation, we'd go in and buy. Now, if 1, 2 MPCs, we saw that we're draining reserves too fast, that the gap between the official and private market rate was going too wide because of inflation, what we would do was announce a new target band. It was unconventional, but it was very useful. The important thing is when a manufacturer buys the dollar at 500 naira to import raw material, by the time he wants to replenish his stock, he's not buying dollars at 900 naira. Production. When a portfolio investor brings in funds to the stock market or to the capital, to be wiped out completely with a fixed rate. And everybody knew we did not have a fixed exchange rate. We had a crawling peg. If inflation was too high, looking at the data, we'll be able to have a good idea of what you're likely to do. So what has central bank done that's right? I think they've done 2 things. They're on their way to the third, and these are the things that I would do if I was there. The first is, of course, to work on paying off the past dues, clearing past due obligations. And my understanding, you guys know better, my understanding is that there is a lot of progress with the banks on raising the funds to clear those past dues. Percent of stability. To our great surprise, he said, agree with me. Everyone had to defend his vote and explain why he voted the way he voted. And just that, you go borrow dollars and fund the market. If you do swaps and fund the market, that's fine. Despite all, they have cutting edge technology, and this is a long-term solution. So imagine converting all our vehicles, converting public transportation, goods transports, and dot rules at a time of very low interest rates. Now inflation just crashed. It had a liquidity problem, sold $21 billion of bills and took a loss of $1.8 billion. This of easy money. We have to be careful and make sure
Chairman of Titan Trust Bank and Fossil Wave, amongst many other boards that he sits on. Mr. Lemo started his career in Atto Addison and Co. Chartered Account.
Good morning. Let me stand on the existing protocol. Nevertheless, I'd like to salute my boss, the 14th Emir of Kano, who speak before me. I would have said it's an anticlimax because most of what he has said made her and encourage innovation. As she was talking about that, I put a big question mark, and thank God Emir Sanusi came and said, well, innovation the role of the central bank. And then we did a data risk weighted, and so we should have banks
well capitalized for the risk they undertake. The Central Bank of Nigeria has not been able to ensure that we keep the targets when it comes to inflation. For some, inflation is all the time conducive to growth. I must tell you, for an economy to grow sustainably, perhaps between 3, 6, 8% of the target inflation, I think it's there. In our days, under his leadership, whether there's headroom, money supply relative to where it should be. Oftentimes we quote wrong figures. In those days when after 9/11, like very wide margin, it is because there was room. And of course, they did that through the money market. We could do that in Nigeria, but unfortunately, inflation will not let us do so. And so what do we have when you do QE in Nigeria under the living low growth, and yet inflation level is very high? And so it's usually a dilemma for policymakers, because what 200 billion naira? I was asking, he said, but madam, you heard me, I said, look, we've had this conversation, we cannot do anything. The company of our operating surplus. We then agreed that they will write and play the trouble that we see today. So it's look, some of these things that we're talking about, they are natural laws. You break it, then you bear the consequences. But what do we have to do? A central bank that was an ATM. I remember, oftentimes I will risk money to do X, Y, Z. And then I'll put down the paper and say, when has central bank become an ATM? Government, you are also penalizing the banks or the customers through the banks. Now, how have these permits been funded? A lot of us are not asking questions. It's the same reason why your CRR has gone up. CRR is something you cannot explain. It just comes as debit. About Nigerian external reserve, Central Bank, of course, has the responsibility to manage that. In the past, we saw how reserves have been going down largely because of some of the issues, inflation, because of the power, the propensity to buy dollar just goes up, and so the price of dollar must go up if, of course, free money is made available. And in the past, we have seen the rates. Central Bank introduced certain measures, 40 plus 3. If a product is not supposed to be imported, the fiscal authority is distorting the market. At the end of the day, if they are meant to be imported, they will be imported anyway. And that is really why we are where we are. Rethinking the role of central bank in macroeconomic stability. I have just discussed most of these fiscal activities that we have been embarking upon. IMF has been criticizing us time after time. I read Article 4 every year, and it is always there. Sometimes they are political. As soon as practicable, we should wind down and we should do all of this, but we shouldn't have done it at all. At all, if ever. I mean, these are things that should have been left for the fiscal authorities to do. Clear-cut monetary policy framework in Nigeria. As the CBN has failed to keep inflation within 6 to 9%, the CBN has not demonstrated its monetary policy independence, as most actions reflect the choices of fiscal authorities. We often have meetings are held, and then before you know it, central bank has a product that addresses that problem. Another meeting is said the following month. Oh, today it is National Theatre. Tomorrow it is hospital. Next tomorrow, and then you wonder whether, of course, the de facto government is now within this other government. And I think we are all guilty. We shouldn't blame anybody at all. We all saw it, and we saw it, and then we allowed it to be. Even banks, their balance sheets were hit time after time so that we can have National Theatre. And then, of course, I must also say, the recent foreign exchange reform, which pay for a fully liberalized forex market, is laudable. But more effort should be made towards improving forex availability. And again, the details of that had been provided. Medium to short term, what we should do, and long term. I don't need to go into that again. To reduce rate of currency depreciation and inflation pass-through. What do I mean by inflation pass-through? Since most of the things are still imported, of course, if price of dollar continues to go up, we are importing inflation, more or less. Good as forex liberalization may seem, care should be taken to prevent foreign liquidity crisis. CBN Emir Sanusi said, Nigerian currency is not freely convertible. And so and I said forex management, he talked about crawling peg. But the way crawling peg is and managed float, more or less the same. You know, you have the free float, and then, of course, you have the what they call rigid peg, like they do in Dubai. But if you move towards market a bit, you can have crawling peg or you can have managed float. They are not exactly the same, but basically what we're saying is that whether you are floating, you still must manage your forex in line with your objective, with your money, with your economic objective. And of course, where you need to intervene, like he said, in those days we would intervene. If the market was awash with dollar and we saw foreign exchange, we saw Naira appreciating, you know, in real and effective terms, what we did was to buy. We'll go to the market and buy, and you just see reserve level going up. And the reverse happens when, of course, you needed to intervene. That way you'll be able to stabilize the market and anchor expectation. At least people can sit down and plan. Now, talking about financial system supervision. Central Bank, in addition to its role as monetary authority, also has the responsibility to supervise the banking system or the financial system. Central Bank is the lead regulator. There are also other supervisors in the financial system. Of course, you know the role of SEC, you know the role of NDIC as a safety net, financial safety net, at least to protect depositors. But Central Bank has a central role in getting this done. And there has been argument whether those two roles should reside in one institution or there should be division of those roles. The jury is out which one is more efficient, but I will submit that as a developing economy, it's better to put the two in the same house. And the reason is quite obvious. Because if you see a bank that is troubled, and then you are not the governor of Central Bank, then you need to do a memo, you need to go and sit down with the governor of Central Bank. By the time you are holding that meeting, that bank is gone. That bank is gone. You see, and that's really what regulatory aspect of the Bank of England went into. Is it financial FSA? But there has been a rethink, and FSA has been tweaked again, and I think the supervision is back. Correct me if I'm wrong. I'm not current about this, but many are having a rethink. In jurisdictions like Canada, they have done it. They have separated both functions, and it's worked for them. But for developing economy like ours, I believe that we should still warehouse the two activities as one. And of course, the overarching purpose of central bank's financial system supervision is to establish and maintain stable and well-regulated financial system. And when you talk about financial stability, it's not that each of those institutions will be strong. Individually, they can be strong, but collectively, they may be weak. They say a system is as strong as the weakest link. So as central bank looks at those institutions prudentially, there is also the macro-prudential activities that ensures that the system as a whole is strong. Which is why these days, when an economy is upswing and you do all your provision and everything, it is now expected that you make extra provision. You call it counter-cyclical measures to ensure you create buffer just to provide for the rainy day. And the reason is pretty obvious. Because it's easier to make money when an economic upswing, and when you begin to have problems, it's more difficult to make money. And if suddenly you realize that your reserve buffer is very low, it's very difficult then for you to make that buffer. So when you take counter-cyclical measures, and I think I want to commend Central Bank for coming out with something close to that a few months ago when they said most banks, I won't mention the banks that are raking in money now, but one of them is smiling, looking at me. Because when you look at their forex, you know, suddenly forex value went up, and most of them who have positive gap, you know, they made a lot of windfall. And those who have negative gap lost a lot of money. Those who made a lot of windfall, please make counter-cyclical buffer so that tomorrow you will be, and I think there has been an instruction to that effect. Please, it's very important, and even for us who are dealers, let's encourage people to do so. And of course, there is also need for contingency planning. You know, in our days, it was a requirement for banks to actually, apart from the stress test that is conducted time and again to ensure that You know, in the event that those variables begin to fail, how resilient are you? You should also have contingency planning in the event that you lose the liquidity. Where do you run so that you get? I mean, it is documented, and it's not just papers that are put together. There are things that are tested. You must name names of institutions, banks that you resort to. These things are very, very important to ensure financial stability. And central bank has a responsibility to ensure that those banks individually operate in a safe and sound manner, particularly when they are particularly the big money center banks that are, I'm looking for the word, that are very, to discourage contagion, banks that are, thank you, Governor, systemically important. Banks that are systemically important, if your market share is more than 5%, you are becoming systemically important. And it's important that you organize yourself in such a manner that should there be any problem, you can stand. So systemically important institutions are required to even have extra buffer, capital buffer now. 10, okay, thank you. So for those ones, and then going into my paper, I talked about the stress tests, the CBN Financial Stability Report of 2022 actually revealed the results of the stress test that was done, and you will see there that the liquidity figures here, some banks actually could need some assistance in terms of liquid. So money market association, that is to celebrate you, because I know that a lot rests on your activities, 80%. So we know, I think today is sound. How sound? Is sound into capitalization. But when we talk about bank recapitalization, I submit that we should avoid the mistake we made in the past. I was part of that mistake in the past. One size fits all is really not wise, because a bank could decide to be a niche player. And so you should size up a bank based on the risk that it intends to undertake, as opposed to you mandating a minimum. If you do that, the cost of coming back on risky practices which may put their capital at risk. And so we have IAP now and other things, measures. Let us use that and ensure that individual banks can then determine the level of risk that they undertake, even as we march towards 1 trillion economy. Financial overhaul requires that stress test is conducted on both banks and non-bank financial institutions. Investing in sophisticated technology analytics for real-time risk before, and we also know, before we permit or give approval for any of the banks to go into other claims, it can affect Nigeria. But forgetting that the type of the risk they undertake over there may not be exactly the same, like he said. Over there, the esoteric products were there, which made them bet. We had the local equivalent. Banks betting on petroleum products, bank betting on shares, stability. Recognizes the limits of the other to allow more room for operational independence. The authorities and monetary authorities are not competing at all, but they should work together and collaborate together so that all the policies are in sync, they are consistent, and that is when we can have stable macroeconomic environment and then stable financial stability. Once again, I want to thank you for inviting me to share my thoughts with you on this. I want to thank my boss for actually extemporaneously taking up most of the things I have put down together. Thank you very much. God bless you.
Thank you very much. 5 minutes.
Sell FX easily, right from the app. Where all other feet, the new Key Mobile app. Keystone Bank, we
FMDQ Group is the one-stop platform in Africa where you can efficiently commence and end all your financial markets transactions. From registration, listing, quotation, and trading of debt securities such as bonds, commercial paper.
Thank you. I think we should just take about...
Next speaker is actually one of us. Zeal Akerewe currently runs Grammy Black Advisory, a financial advisory firm focusing on risk management using derivative, and has 25 years post-graduation experience in the financial sector with experience spanning, and was a key member of Standard Chartered's thought that optimal results is obtained without flouting regulations. Zeal plays other roles such as past president, and current member, Governing Council of Association of Corporate Treasurers, member, National Assembly Business Environment Roundtable, member, Derivative Advisory Group, FDAG, FMDQ OTC, member, Securities and Exchange Commission, ISDA Work Group, and he's also an author in his time. Ladies and gentlemen, welcome my friend, Zeal.
Thank you very much. I wear very many hats, and I need to remind myself that I'm not here as a financial markets person. I'm here representing the NES. FMDA has been an engine of reform in the Nigerian financial system and has used previous conferences to rededicate its members to national development. It's an honor today to speak on development of real sector for economic growth, and I want to thank the partners and trajectory. Ladies and gentlemen, permit me to provide a broad understanding of what the real sector means. The real sector refers to the segment of the economy involved in producing tangible goods and services. It is real in the monetary value addition to the economy. It encapsulates all industries producing one form of goods or services, from manufacturing, agriculture, mining, construction, ICT. Growth performance across sectors also reflects the subdued growth in the real GDP and the non-oil GDP sector. Recession, most of that investment has not been coming. And so one of the reasons we're having declining production, Dr. Lemo said so, is that these are aging fields. And if you're not investing to produce, then you're going to be having declining production. And don't forget, in addition to not having investments and not being able to increase reserves and increase production, we're having oil theft and a lot of leakages. So the oil production decline is a combination of all of these factors put together. Now, also, during the same period, the average growth in the agricultural sector was also suppressed to just over 2023, and it grew 2% 2022, sorry, and it's growing only 0.6% now, but your population is growing something like 2 or 3%. You should not be surprised that we're having pressure on food production and food prices are rising. Now, despite this sector sustaining the economy, that's the service sector, it grew by 4.3%, down from 7.1% the year before. The transportation sector has also been hit the most by dual impact of the removal of subsidies and the depreciation of the naira, and it contracted by 30%. I had a conversation regarding this in one of our WhatsApp groups, one of our many WhatsApp groups, and people were asking the question, since things became harder in the country, what type of sacrifices have you made? And a lot of my friends, some of them are here, I'll mention their names, they say things like, instead of going out every weekend, I go out only once a month. And this going out, we know what it costs to go out, right? And a lot of people business class through Ghana instead of. But you see, these are not the cuts the common man in the real sector is taking. We are talking about flying abroad. We're talking about going out. And so I did a video and I walking. We are talking of cuts of, instead of buying Freedom Way, the length in 30%. It's not people like me and you that feel that, but it's a reality for most Nigerians. Now, coupled with all this, we had the global supply chains trade outcome. In the first half of 2023, Nigeria's international trade weakened due to lower imports, lower exports, and lower imports and exports declined by just under 20% compared to H1 2022. Imports declined. Productivity and real sector performance continues to reflect in Nigeria's performance across socioeconomic indications and the people's standard of living. Now, 5, macroeconomic instability in the whole country. Yeah, maybe 300 treasury staff, right? If you were to check the number of staff in treasury out of the 300 that had more than previous CBN administration experience, that number crashes by 90%. A very small number. 30 is literally 4 or 5 tables here. It's here to convert the youthful energy into a workforce that will drive economic growth. Now, in many places, you hear that the population of a country, a young population, but in reality, people are then stressed to support because we don't have any sort of that it drives corruption. Because you have somebody needing to do significantly more for a lot of people that cannot do anything for themselves. Now, Nigeria's HCDI, that's the Human Capital Development Index, stood at 0.563rd out of 191 countries. That doesn't sound like a pass mark to me. If my child came 163rd out of 191, we'll have major issues at home. This puts us really in a bad place. Now, the low HCDI is not surprising considering the slow pace of advancement and evolution in Nigeria's education and capacity development, healthcare, and social safety net. The education and health sectors are inadequately structured and inadequately funded. I had a discussion with Nadia regarding this, and it's one of the things I say about us Nigerians. And okay, this is now me speaking with my financial markets hat. And I say that one of the key things, one of the key qualities Nigerians have, especially in the financial market space, is our ability to circumvent problems. We are experts at circumventing problems. So the central bank brings out a circular, we don't understand it, we will not seek clarification, we will just find the best and most efficient way around it. And it works. But what that has done in the larger economy is that we have near zero capacity to solve any problems. And so you can pick anything you like. If you get home and all of a sudden power outage is very frequent, a lot of us in this room are in the top, not a lot, all of us in this room are in the top 1% of the top 1% of the country, right? All of us have access. We may not know it, but we have access. None of us is going to use that access to solve the problem. You know what we're going to do? Generator. And when running the generator becomes very expensive, you know what you're going to do? Buy an inverter. Have we solved the problem? No. We've just circumvented it. For solar. And we'll continue doing all those things. We don't look to solve problems. We look to circumvent it. And we have become experts at circumventing problems. And so when you've circumvented a problem long enough, after 1 or 2 generations, you know what happens? The problem is still there. And so we spent a lot of money, a lot of resource, a lot of effort, and the problem is still there. And then we turn around and see it's a spiritual problem. It's really not. So let me just continue. Okay, back to the NES jihad now. School enrollment rates dropped drastically through the levels of education. Between 2010 and 2018, average enrollment was 90%, 45%, and 10% at primary, secondary, and tertiary levels of education. So at primary level, 90% of people enroll. It drops to half of that at secondary. By university, you're down to 10%. And that 10%, I mean, we are not even talking the quality and the type of people, but that's how the numbers crash. The school dropout rate stands at 35%, above the global average of 8.5%. The development of an economy is to the extent of the capacity and country's industrial pace. In many industrial outlets in Nigeria, most Nigerians, and I would like to add, very low quality foreign technocrats. Now, I'm not even talking about the best coming here. If you interact with them, you'll be surprised at how they even got work permits into Nigeria. But this just emphasizes the skill gap that exists in Nigeria. Also, in the Q1 labor force statistics, Nigeria's, I need to emphasize, adjusted unemployment rate was 4.1%. But, well, that's mathematics for you. The main reason for such a dysfunctional labor outcome is the gross lack of capacity, which makes most of the working population unavailable and unskilled for formal employment, and they have to therefore settle for informal trade and agricultural activities. So you find that a very large percentage of the Nigerian workforce is engaged in agriculture, which sounds like a plus, but if your agriculture is based on hoes and cutlasses, then you have 100 people spending a lot of time and energy, but having the productivity and the output of maybe one person with a tractor. In my own opinion, I don't think that's really progress. The other thing regarding agriculture in particular that I think is important for the bankers is that we treat the agricultural sector as a sector for uneducated. We don't realize that the agricultural sector is, in my opinion, as specialized as the oil and gas sector. But because a lot of us don't interact with them to understand what happens, the NASG released a paper on food security a couple of years ago. I consider myself extremely enlightened. I read that paper, and it's a long time I felt that security. You're talking about water security. I didn't think about that. Soil security, seedling security, and I think there was transportation security. And I realized, I went on with the paper and I looked, they had a map of Nigeria with the different soil types across the country with their mineral content. The ones that had high magnesium that were good for this and bad for that, the ones with low boron content. And then I was looking at this map and thinking, this is the type of map and research that you need to design what type of fertilizer you need. But guess what? In Nigeria, when you fund your LCs on fertilizer, how many of you know that there are different types of fertilizer that have different components and different minerals? All we do in Nigeria is NPK. That's it. NPK. So if you've ever bought corn, roasted corn, have you ever bought corn and then maybe there's 3 or 4 rows missing? You know, you know why? The NPK we produce is in pellets, right? So when the farmer spreads it, you're leaving it to probability and statistics. A lot of N can go there and a lot of P can go there, and corn is very sensitive to that. So the type of fertilizer, for example, that you need for corn is a paste, so that it is a uniform distribution. If you don't get that uniform distribution, then the quality of your maize is going to be too low for any productive use. And that is why, believe it or not, we spend so much importing maize. You'll be shocked that that's during the Russia-Ukraine crisis, during the recession, we had to import, our strategic reserves of maize was basically a couple of letters of credits. 2 or 3 of those people bring it in were my clients, and I was shocked at it. So a lot of things that we take for granted in the real sector, we need to understand that from the banking sector, if we don't treat certain sectors as specialized, we're going to leave it for the wrong type of people to run. So regarding infrastructure deficit, we know that the deficit is very elevated. The level of infrastructure available in Nigeria continues to fall short of the requirement to drive productivity and an effective real sector. According to the World Bank, Nigeria's infrastructure stock stands at 35% of GDP, which lags behind the World Bank's international benchmark of 70%. Also, based on Moody's estimate, Nigeria needs 3 trillion over the next 30 years to cover its infrastructural deficit. This amounts to $100 billion per annum. And based on the current level of infrastructure spending, the government is hardly investing 10% of the total investment requirement annually. Now, I would challenge anyone, if you look at Nigeria's budget from, I've looked at it from 2008 to 2015. I kind of stopped looking at data after that. But 2008 to 2015, Nigeria's budget was, interestingly, plus or minus 10% around $31 billion. That's what it was. If it's low, it's 28. If it's high, it's 34. And you find that our current 27 trillion budget for this year, it's a massive number. In 2015, the Naira figure was 4.5 or 5 trillion. But 5 trillion in 2015 was how much? $30 billion. 27 trillion in 2023 is, guess how much? $30 billion. So you find that over in dollar terms, you find that there are certain key industries. If you want to build rail, like SLS was talking about, if you want to repair your refineries, if you want to talk about improving and introducing key maritime reforms to build ships or build cars, you know one of the sectors you need? Steel. And guess where our steel industry is at today? Practically zero. So you want to drive local production of trains or rails, you cannot spend Naira because you have to import steel. And that's why our growth is so tied to the dollar, because we have not developed certain key industries in Nigeria. Now, Nigeria's deployable electricity supply and other infrastructure. Nigeria's deployable electricity supply and other infrastructure have pushed many craftsmen, artisans, and MSMEs out of employment and out of business. Besides, it has demotivated the uptake of technical vocational education and training and made the country short of a huge technical workforce. Moreover, the infrastructural bottlenecks have put upward pressure on businesses' operating costs, inhibiting their performance and growth. Now, moving on to external vulnerability. Well around in 2020, when we saw the outbreak of the coronavirus and it spread to the rest of the session, that ended around, achieved some level of stability of the exchange rate at plus or minus a bit around 360. And 2018, we were stable. 2019, we were stable until COVID. And so this just emphasizes our susceptibility to external shocks and the vulnerable equipped to manage the crisis. We did a lot of the wrong things, and we're still living through that impact today. The inflationary pressures from the eventful global as central banks around the world hiked rates to near record levels in 2023. This has impacted investment and productivity in Nigeria as it has battled with capital flight, low investment, depleting reserves, and pressure on exchange rates, as well as worsening inflation and suppressing economic growth. Now, on the other hand, Nigeria has an unhealthy dependence on import for various necessities, ranging from finished petroleum products to food items. Our import bill in Nigeria, give or take, is anywhere around, I don't know the figures today, maybe 40 billion a year, give or take. Of that 40 billion, 25 to 30% of all our imports in Nigeria are related to petroleum products. So imagine we did not have to import all the petroleum products we import. It means that we would have allowed our reserves to accrete every year by $10 billion. Calculate that over any number of years you want to start counting. It would have made a massive difference. And what's the reason we have to import finished petroleum products when we produce crude and we have 4 refineries? And SLS has mentioned it, that it's not possible to talk about the growth of the country, the development of the country, without throwing NNPC. Of just petroleum products alone, over the past 8 years, for example, we would have saved $80 billion. And that would have been part of our reserves. And I assure you there is no shock that came with COVID or anything that won't have been able to withstand Nigerians, and to diversify and improve value addition to boost exportable options. Now, for macroeconomic instability, assessing Nigeria's macroeconomic instability using the Maastricht indicators confirms the country has a volatile macroeconomic environment. I mean, this is like me standing under the sun in Lagos, and some government policies have spawned macroeconomic instabilities. Policies such as the border closure the forex restriction on some 43 items. All of this contribute 14 and 2022 money source prices will go up. Now 5%. The person producing is borrowing at twice the cost. He's going to increase his prices. Yeah, which that the banks increase their interest rates. Yeah, which that the banks increase their interest rates, which means that his input cost increases and he passes that on to the consumer again and prices go up again. On this, moreover, inconsistencies in some government policies, regulatory bottlenecks, and legislative encumbrances, high levels of corruption and untamed insecurity hinder productivity growth, constrain the domestic supply chain, and heighten price levels in the economy. Okay, I'm going to additionally, the recent surge in government borrowing also, I'm always reluctant to talk about it, to invest in the real sector, both of 15 to 18% yield on government bonds hardly allows any business guarantee such returns. And so it's a bank is an arbiter. You are taking from the surplus end of the economy and shows will be the endowment of human and mineral resources, which we have now begun to look into more aggressively. Also, the emergence of new government gives Nigeria another opportunity to redefine its economic strategy and set forth a path of sustainable growth. Now, based on the National Development Plan, NDP 2021 to 2025, Nigeria's economy is projected to grow by 5.4% and 6.3% in 2024 and 2025. Also, the NESG in the NESG pathway analysis projected that Nigeria can achieve a 1 trillion plan says that the investment need stands at just over 300 trillion, and that's 14.3% from the government and 85% from the private sector. Likewise, NESG in its pathway analysis projects that Nigeria will need to attract a cumulative 1 trillion is also part of what we found to be sabotaging the economy. The speculative action of operators in the financial certain level. The past decade's experience has shown that this practice is not sustainable as the premium in the parallel market keeps expanding in the foreign exchange market. In particular, access to forex needs to be realigned to facilitate international trade transactions. So in conclusion, ladies and gentlemen, the real sector forms the basis for operators in the financial system are saddled with the responsibility of facilitating the availability of investment in the capacity gap in the financial system, in the economic sector growth and national development. We would like to express sincere appreciation to the organizers and the members of FMDA for organizing the conference and allowing us to speak on this national discussion. Thank you very much.
Both hats to 2005. His profile is very long, but I'll try my best to make it a little short so that we can get along. He's an astute multi-skilled banker and perhaps one of the few individuals with work experience spanning several years as treasurer in banks, in the private sector, large corporate organizations, and the public sector, handling positions in operations at First Pension Custodian Nigeria Limited.
You know, I mean, we are FMDA people here. We always plan for the success of our conferences and things like that. At the time when His Royal Highness had not, I was asked to present a paper on pretty much the same thing he talked about. And our dear Patience Oniha, DG, Debt Management Office, unfortunately had to be recalled by the presidency on national assignments, so she's unable to be here. And so what I would be doing in a few minutes is talking a little about the debt management issues we have in Nigeria, and then I'll go back impact of exchange policies on the market. Or maybe I'll do it in reverse order. So I'll start by saying that we had the opportunity to listen to SLS, and he spoke off the cuff and he addressed many of the issues. Government officer, you're sometimes caught between doing the professional thing and doing the bidding of your appointer, as it were. So that sometimes presents a dilemma for the operatives and for many professionals that have worked in both the public and private sector, where different rules apply. Now, with regard to the policy, foreign exchange policy for Nigeria, I always wonder whether we actually have one that is documented, because like the previous speaker adduced to, most of the people who had, permit me to say, they probably learned it the wrong way. And that is a consequence of a number of unorthodox type policies that have been introduced from time to time. Our grand elders would remember that once upon a time, you would receive a letter notifying you, a letter from the central bank, notifying you that there was going to be a CRR debit, and that it would be on such and such a day, and it would give you time to fit. Most simultaneously, the growth of local. Now, the exchange rate policies would impact several points in our economy, and that is why there have to be a number of trade-offs considered when you talk about policy. The first and most obvious is that your exchange rate policy would affect your export and import competitiveness. Obviously, if if the exchange rate, which meant that you could access dollars at close to 2 or 3%, and interest rates in Nigeria were kept then at about 17%. And if you recall, the MPR, or the MPC, did not change interest rates for, I think it was almost a period of 15 months. Almost 15 months. Now, what impact did that have in the country? With QE at 2 or 3%, and with us in Nigeria, hold arbitrage. And what made that cost of carry arbitrage exchange rate? Kind of provided comfort to investors that anytime we have of necessity going to be a rise in exchange rate, we found out that it was not always true. There are other, the import-export competitiveness, and then inflation, how inflation is imported. So as the rates are rising globally, US dollar rates are going up, and we're still buying and importing a lot. We're also importing part of that inflation into the country. Driven exchange rate. However, to leave it completely to the vagaries of the market at this point in time, I believe is irresponsible. I mean, when we look at the changes that were made, there were too many changes made at the same time without giving time for one thing to settle. So the subsidy removal, we all knew had to go. But then combining that at the same time as an exchange rate liberalization, especially where the exchange rate was a component of the landed price of petrol, was a formula for disaster. When you look at consumer and business confidence with regard to investment in Nigeria, because with every day you delayed that investment, the chances were that you would get more for your. So that is essentially the role the central bank plays with that regard. The other aspect, part in the subsidy chain, when you tip this guy, you do this for that person. We all have a welfare system. Now, the issue is that now the subsidy is concentrated in the hands of the government. I have seen so many of these. I think some of them have even degenerated into scams. Oh, you want to access the 35,000 the government did, please put in your details in this website, and so on and so forth. That has gotten anything. So you then wonder, we experience a lot of difficulty in growing the policy itself and the practice, because the practice sometimes falls in what you may consider to be an FX allocating mechanism. So when you look at all the past due obligations need to be settled, I agree. But the past due obligations have been contracted. To crystallize that poor market, the truth is, ever since the policy has come into place, people have still been policy. Then should we go back to what we knew was certainty? The truth is, even if you wanted to do that, the fundamentals have changed. Zill's analysis, 30 billion changed, and they're changing every day. To go backwards may sound like a good idea, but the truth is we need a solution that would take us to a new destination where the markets, and with as little control as possible, referred to. The Article 4 document always refers to exchange controls and how we can make progress towards liberalizing some of those exchange controls. Some of these discussions have been, we had late DG Melafair. I think Mr. Shenjobi here would know what I'm talking about. But then what used to happen was that we had a central bank that was, and the basis for engagement was the fact that if they are going to supervise something, you've got to be able to understand it, to be able to control it. And so we had several platforms that were granted for us to participate under the same association, Money Market Association at the time. We got invited to central bank strategy sessions, sometimes as observers, sometimes. And I sat down with three people from the central bank and two other gentlemen. We're not leaving this place until we have a solution to this problem. And we came out not just with how powerful, out of building a two-way relationship where you can is probably through novation, which involves the consent and agreement to do a reverse transaction. And so, because we've had the skills gap, we've had unorthodox policies, our exchange rate policy is just about everywhere. You pick up snippets of the exchange rate policy here and there, as opposed to having one. And I look at Nigeria. And when you see the anchor of the basis of policy, one of the exercises we also looked at the central bank response to try to develop a model or a holistic framework that, and who can trigger that intervention. At what are the other macroeconomic parameters or variables you're looking at to say that, you know, we've reached a trigger point? Is it when the oil production drops from 1.2 million barrels a day by 10%? Is it when interest rates break the threshold that has been set? What were the items that would trigger certain reactions? Again, that model helped to an extent to understand what was going on, but it wasn't taken to the next level. In most of the developed worlds, there are macroeconomic models that you use to determine the impact of policy, possible impact of policy on the system. There's also a place for the nuances of our own country, individual countries. Because many times when people talk about pass-through mechanism, the pass-through mechanism in a developed country is largely through a well-developed, we all do here on a cash basis. Our day-to-day transactions in other climes is done through a credit card system. And therefore, any changes in the impact almost immediately and almost directly. Whereas the pass-through mechanism in this part of the world could sometimes endure a 2 or 3 month. Or again, you have to make allowances for the fact that the nuances of our own system will not allow that transmission mechanism to be immediate or to be as impactful. So I think I have touched on most of the points that encapsulate the impact, the key impact advanced to the government. But the truth of the matter is, what's happening on the revenue side? You are paying the interest, you're servicing these debts out of revenues. And if the revenue base is dropping, then we'll experience the crisis, the kind of crisis we have. And the answer to that crisis in this country always seems to be increase the budget to cover the deficit, which then triggers off what we saw in horrendous amounts of ways and means financing that rose from 4 trillion thereabout in 2014 to about 20-something trillion naira, meaning the liquidity in the system. In fact, at a point, I was confused as to whether we actually knew what liquidity we were targeting in the system. Because in the past, for the basis of controlling the liquidity became very, very significant and could not even be ignored. And that perhaps that was what led to the pause in doing OMO for a while and trying to look at other means, which again led to another crisis of banks. I know one of the international banks at a particular point, and so if they wanted to create a loan production in the economy. I wish Ms. Oniha was here to hold brief for the budget, for the debt management aspect. But I think we have allowed to permeate in our system are things that need to have been phased out. In this country, we are fond of creating or trying to drive an outcome, and then we create all sorts of sweeteners, and then we forget that those sweeteners are there. So I'm sure today banks are still being paid for bringing customers to the bond market, way after the bond market has developed. All right? The AMCON, our creation of Bad Bank, was meant to have a 10-year lifespan. We've not heard anything about AMCON. Once upon a time, we had, what's it called? The remittances, technical, still remind me, what's that thing? Is it overseas technical remittances, or what is it? And the policy was that, oh, this company has pioneer status, we're going to grant it this for so it's X number of years. And then everybody goes to sleep. And those loopholes exist in the system, and they continue to exist. And we continue to bleed without really knowing where some of this. Otherwise, all you're doing is kicking the can down the road because they will pick up the bill. During the Obasanjo administration, the Paris Club debt was repaid, London Club debt was repaid. But we find ourselves back today, even in a worse situation than we did. It's a big problem that we face concerning the debt burden. And the truth is, we are trying to borrow and spend our way out of a crisis rather than, again, if I were to borrow from Zill's word, we're circumventing the solution rather than addressing the solution. So it's time for us to sit up, tell ourselves the truth. It's amazing that for 8 years or thereabout, nobody seemed bold enough to tell the truth. That is the political side of things you don't see. I know everybody would have a good reason for not wanting to be the one to hold the speaker and, say things as they were. But fortune follows the brave. And I think HRH was one of the brave. He's never stopped shouting about the crisis in NMPC. And I believe that that is one of the key areas where the unraveling of the solution to this country's problem lies. I have friends in oil and gas. We've talked about this flow meeting and is delivering stability into the system. And on the debt side, I think that it is time to take another critical look to ensure that all the money that is raised through debt, with the exception of very few circumstances where you do it, must have all necessary conditions to ensure that the debt gets repaid. That is the only way we will not continue to build up debt astronomically. We're all familiar with sinking funds and how they are created and what they represent. And that's what we tried to do at some point in time, to ensure that if we take in any money, foreign exchange, and I think when he mentioned the swaps and forwards, all right? So if we don't start to address those...
Very insightful. I would like to introduce our grandfather. I'll try. Okay. I would like to introduce Mr. Jibril Aku.
Going into anyway, mine is not turn FMDA conference so that we can attract powerful speakers. Otherwise, some of these people will go to other platforms where they will be expressing their views, whereas they belong to us. And I must commend Nadia Zakaria and her team, GC. So your predecessor took most of our beating, Bayo, but you are now running the way we want it to be. So thank you very much. And the turnout has been 1. Inflation was 72. So things have gotten worse before. And they took an unorthodox approach to arrest it. You may not like Abacha's way, but he arrested it. He did a massive contraction in fiscal spending. In fact, for the 5 years I think he was president, the ministries were only paying salaries. They didn't do anything. That brought the balance and reduced inflation to single digit. So by the time the civilian government was coming, they've been handed over a good government. Somebody has done the hard work. But of course, maybe undemocratic, but somehow it did the job. But the challenge with Nigeria and fixing the policy around foreign exchange will continue to be a big problem because of the high demand for foreign products. Everybody wants foreign things, and then you don't have the foreign exchange, you're not doing enough, you're still relying only on oil. We've experimented with several means of determining what is the appropriate allocation method to use for finding the true value of FX. You've heard of the Dutch system, you've heard of several other systems, but it's still a challenge. Until the economic base begins to produce, like you said, he gave an example. If 25% is around imported petroleum products, why are we importing that? Why? This is something we can save. I remember when the former governor came in, he identified those same issues and said if he could save that, but he went about it the wrong way. I think with Nigeria's democracy, we'll continue to see these challenges. In the US, they said the controller of the purse is the parliament. But here it's not. They're just as eager to play along. Because if you don't want the government to fail, and the government wants to draw some more money, what do you want the central bank governor to do? His options are limited. So, yes, in some of the West African governments, government can go broke there because the reserves is not with them, it's with the French government. But here, like he said, they said they wanted 100 billion. I'm telling you, if they did not give that money by way of advance dividend, they would have found the 100 million. Because that's the way the government is here. They say, give us the money. You run to parliament for protection to say, okay, let the parliament challenge them. Those ones are eager to sign for you to give them the money. So then what's left? You and the gun. Are you going to say no? Or you want the government to default? So those challenges will continue to exist, but we should remain professionals as we have always done and hope that the market will continue to develop to the point where all the structures of government begin to work. Because right now they're not working. All of them begin to work. We have quality people in parliament who will hold the government on to the agreed number, the agreed statistics. And then, because right now, I can tell you, people might not believe it, if this government does not restrain itself, this government, the executive, does not restrain itself and wants to do the same thing, there's nobody stopping them, and they will take the exchange rate to 10,000 if they want. But there's self-restraint. That's the only thing. But we don't want it that way. We want the parliament that has that responsibility to restrain them and ensure that we are growing at the appropriate pace that we say we should grow. Everybody has said it here. What the manufacturer needs is price stability. He needs to know that if I requisition my goods, by the time I'm selling them, I can go back and buy at the same price again and not meet a change that forces my cost up and make me have to reduce my workforce or reduce everything I'm doing. So this is good to the president and your team. At least we have good attendance from some old presidents here. We have A.W. Abayomi, who is here. I think he is the 5th president. We have Bolaji Shenjobi. And of course, Funsho Shobanjo. And before then, we have Laoye Jayola, who left. The flag will continue to pass along to the new guys who are coming in to, when I say guys, it's both ways. In treasury, there's no female or male. It's the person who gives you money. You hear, you even tell him, yes, sir, before you know that it's a lady. So that's well done. I just want to say well done to the teams and for our regulators who have also stopped by to grace the occasion, say thank you for all the support. It hasn't been easy. Every day we fight with them to get more concession from them so that the market can operate flawlessly. But you know, regulators don't like to give their powers. They want to hold some of them back. We say, no, let it go. They say, no, they hold some of them back. We say, we are a self-regulating organization. We can do that regulation for you. You say, no, they still want to keep it back. Sorry, we're not trying to make you unemployed. We just want to make the market better. Today, we are facing the same issue with SEC. The king, we say, give us some of this power. We can get it done for you. We can enable a paper into the market faster than you can do. We don't know what you are checking in the ISA. Just bring this thing. We can operationalize it, and the thing will just run along. You have to go through our process. Long story, but it's work in progress. We will get there one day. But top 10 banks, open up that liquidity so that it goes round, and then we can have where we can run the market without worrying about counterparty risk, because we've controlled it. That's the key word. We've de-risked it.
You see why I said when elders speak, children just bow. De-risk the system, release some of the powers, grow the market, equalize, if there's a word like equalize. 1993 and now, I need to come and learn what's the secret. I am more than happy and excited today. It takes a lot to have men like this in our midst. It takes a lot. It just reminds us that we must be better. Probably running around somewhere as a small boy. And yet I've come to still meet the market. Now the people behind me, some people say boss. So what? I make a mistake. Thank you, sir. Thank you. Thank you. You were here during our treasurer's retreat and all of that. Thank you very much. Thank you. Made it happen. Being a lady I respect so much, I told her she should be careful with this finance. She's turning all of us ugly.
On behalf of all members of the Financial Market Dealers Association, I sincerely thank Mr. Funsho Shobande, a highly experienced and multi-detailed banker, having held several roles as treasurer and executive director across various sectors in Nigeria. Inclusion Policy Committee. Dr. Tunde Lemo, chairman of Title Greatly Broadened FMDQ, Governing Council, MD CEOs of banks, former presidents of the association, treasurers of banks, friends of the association, and the press. Your presence and active participation has made this conference inspirational and a memorable one, even as we look forward to 2024. Thank you for your commitment and dedication to the growth and sustainability of Nigeria's financial market.
I would like to thank everyone for coming. Lunch is served, and we'll close by singing the second stanza of the national anthem, please. Sorry, is the second stanza of the national anthem, please. Please, may we all rise?
less. Come to smoke cannabis. Doctor say make a pop one of this. Make me fly like say I'm Aladdin. Come bring some kind melodies. Oh, mama, myself no do pass like this. So many things inside of my jeans. I slide down the beatings, the beatings. tetema. 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 Oh mama. Oh mama. Oh mama. Oh mama. Oh mama, mama tetema.
Plus 2.